Katherine Neiss is the chief European economist for fixed income. She joins us live now from London. So that was quite a hawkish message from Lagarde. I mean, just walk us through how much more ground you think the ECB will need to cover here, Katherine.
Well, they're clearly still very concerned about headline inflation, which at around 6% for the ECB is uncomfortably high. And moreover, a lot of that high headline inflation is being driven by food and energy due to the war in Ukraine. But even if we strip out those components and look at core inflation, even there, we're still not seeing a really clear trend that core inflation is coming off. So my sense is that those two data points of high headline inflation and high core inflation are concerning to the ECB, that could potentially push up nominal wages further and just prolong this period of too high inflation. And so to guard against that, they decided to continue to raise interest rates at today's meeting, and also, as your clip showed, to very clearly signal that they see more of those interest rate rises in the months to come.
Yeah, Christine Lagarde certainly did not mince her words. The ECB also cut growth forecasts, but they're not quite forecasting a recession just yet this year. I mean, just walk us through whether you think more rate hikes will push the EU area into negative growth. What's your projection on that?
That is a big concern because although inflation is high in many places, we see it in the US, we see it in the euro area, the real primary drivers of that are actually quite different. In the US, you see very much an overheating economy, a very, very strong labor market. In the euro area, it's been much more driven by the war in Ukraine and the impact that has had on food and energy prices. And so if you look at, for example, domestic demand, so if you look at indicators like consumption in the euro area versus consumption in the US, you can see that in the euro area, consumption is still very weak. It hasn't even recovered the level that we saw before the pandemic, whereas in the US, it surged well above that level. So a very different domestic demand picture, which would normally mean that the risks are greater in the case of the euro area, that higher interest rate rises by further dampening demand could eventually lead to inflation that is too low. But clearly that is not the big risk that the ECB are seeing just now. And they're much more concerned that this prolonged period of high inflation is going to feed into higher inflation expectations.
What's interesting is what we saw happen in Sweden. Economists essentially pointing their finger at Beyonce for contributing to the hike in overall prices, inflation. Apparently, the artist's decision to kick off her tour in Solna led to a surge in hotel and restaurant prices. So people are literally economists are blaming Beyonce for contributing to inflation in Sweden. What does that tell you about just how vulnerable certain economies and fragile certain economies are here?
Well, we do see from time to time these big significant events show up in the aggregate data. We see it here in the UK, for example, when we have special bank holidays around the Queen's Jubilee last summer. Retailers were saying that they were selling a lot more food and party treats. And beyond a few fun headlines, people generally don't pay that much attention to these things because they tend to fade, as quickly as they've come. But clearly now these things are happening against a backdrop where inflation is already uncomfortably high. And so, that just makes it even more challenging for central banks that are really trying to keep a lid on inflation expectations and bring inflation back to the 2% target.
Right, Katherine Neiss, thank you so much for being with us. We appreciate it.